Hello everyone, today is the 12th of April, which is on a Saturday, and today I just wanted to go over the price action for the past week. It's a weekend, so the markets are closed, and this just gives me an opportunity usually to do my weekly market review and to also do my weekly market forecast for the next week. Now, this past week, we've had a lot of interesting developments in the markets, caused largely by the Trump tariffs that have been announced and paused. And this is causing a lot of movements in the market, mainly due to knee-jerk reactions by traders. And this is not an ideal market for me to trade. I like to get involved in markets that are driven by organic buying and selling pressure because I am a trend following trader. And whenever we get a market that is moving because of news release, it's very difficult to get in on trend continuation trades that will have a high risk to reward ratio because the market tends to move from one side to another just based on a lot of hysteria and euphoria. So we've been able to see this playing out in the markets, especially in the DXY and on US stocks, with a lot of sell-off on the US dollar index and sell-offs in the US stocks, which were able to recover towards the later part of this past week. So right now, I just want to head over to the charts so that we can go through the price action of the week together. So this is the US dollar index, and as you can see, we've had a huge sell-off in the market. And this started when Trump announced tariffs on the 2nd of April, which was last week on Wednesday. So this was when Trump announced the tariffs. It was on Wednesday in the evening. So you can see we had a huge sell-off, we got a correction, and then we've had a continuation of the drop in the price of the US dollar. Now, I do not trade the US dollar index, but I use the price action on the US dollar index to have a bias on what is going to happen on the dollar related pairs that I trade. Now, for example, on the Euro USD, we can see that we've had an inverse in the price action of the US dollar index with the euro rallying upwards, but I've not been able to get any opportunities to take trades in the market because of a lot of volatility, and I also did not get the setups, especially on Euro USD or on any dollar pair, even on GBP USD. We had a push to the upside, but as you can see, we are approaching this high over here, which could be a potential area of resistance. On the Audi USD, we also had the same sort of price action. We had a sell-off, and then we had a price recovering and pushing upwards. But as you can see, we are also approaching this area over here where we can get some sort of resistance. And so I've not been taking any trades on the dollar related pairs. And even on the USD CHF, which is the US dollar, and in the Swiss franc, we can see a huge sell-off because the dollar is really weak. So let's look at the Euro JPY. With Euro JPY, we have just been moving sideways. This past week, we also had the Bank of Japan issuing a statement, and so this is obviously going to affect the Japanese pairs that you trade. So this past week, we've had a lot of markets that have just been moving sideways and with a lot of volatility that is not ideal. Now, we did get a setup on CHF JPY, which is the Swiss franc against the Japanese yen. And this is usually an ideal trade. This is usually the type of trade that I look for because I'm usually looking to get involved in markets where we have an imbalance in buying and selling pressure. So when you have a balance in the buying and selling pressure, the market tends to move sideways. But once you get an imbalance in either side of the market, price tends to break outside of the consolidation. We get some sort of a correction, and then markets continue to trend upwards. In case we get a downtrend, then the market will have pushed downwards, get to some sort of a correction, then price continues to push lower. Now, in this instance, we did get the market pushing higher after we had this sort of a consolidation, so after we got this sort of a consolidation, we got this impulsive push, then we got the setup, then we got the correction, and my entry would have been at the close of this candle at 2 a.m. And I usually set up my charts based on London time just to be in touch with the spread hours so that I can know when the spread hours start and when they end, because I don't like to get involved in trades during spread hours. Now, Why the reason why I did not take this trade, and the reason why I'm not likely to get involved in the markets when we have a lot of volatility, is because for this particular entry I usually use a 15 pip stop. But when you look at what a 15 pip stop looks like in such market conditions, it is so tiny that it just does not make any sense to take the trade. Now look at that. Now it is so small that you can easily just get tagged in and out of the trade. Now ideally for me to take such an entry, I usually want my stop loss to be below the low of the candle that I'm taking the trade on. And for this particular instance, I would have needed a stop loss of about 65 pips. Now this is not ideal, and for me, whenever I see my stops looking so small, I know that the market is way too volatile for me to take entries. And so for this particular trade, I did not get in on the trade, and this helped me to avoid taking unnecessary losses. It is very important for you to just sit out of the market when you see that the market conditions are not optimum, because forcing trades just puts you in a position where you end up taking losses. The other trade that people have taken was on the NAS 100, but I did not take this trade because of what I've talked about, knee-jerk reactions, moving price action. So you can see here that on the Wednesday after Trump announced the tariffs, you can see the huge sell-off in the NAS 100. And then this past week, when Trump posed a lot of the tariffs, you could see this huge buying pressure kicking into the market. Now, my entry was supposed to be at this level at the close of this candle, because as you can see, we've had a huge push to the upside. Now we've had the sort of correction, and we could have been anticipating for price to continue pushing higher. But whenever we get this sort of price action, or we get a huge sell-off and then we get immediate buying pressure kicking into the market without getting some sort of a consolidation at the bottom, I do not like to take trades, because this is an indication for me that the price is likely to get into a bigger consolidation or a range bound market. So this was supposed to be my entry at the close of this candle, which would have been at the just before the end of the Asian session on Thursday. But I did not take this trade because of the price action, where we can see the market is just moving based off news being released by Trump. And this takes a lot of experience, because even without looking at what Trump is announcing or the news, I can see that this is not normal price action, because we can see this sort of V-shaped recovery in price, which is an indication that this is a market that is not being driven by organic buying and selling pressure. Now, this helped me to avoid taking another loss. And so you can see the importance of just being patient and sticking to your trading plan, because whenever you start forcing trades, that's when you start taking unnecessary losses and going into a very deep drawdown, such that even when you get the right setup and you get a winning trade, it's just that trade just ends up putting you back to break even. And this is one of the things you need to be able to figure out before you can become consistently profitable. So we can see that we also had a sell-off on the US 30, as I talked about, due to the Trump tariffs. And you can see this sort of price action, huge sell-off, huge buying pressure immediately after Trump announced a break of tariffs, except on China. So this is not ideal market conditions, and I don't think that this coming week things will be better, because whenever I see this sort of price action, I know that we are about to get into a large consolidation or a large range bound market. So for me, mostly this week will be a risk off market this coming week, but I'll still be on the lookout to see if the market is going to ease up a little towards midweek. If not, then I'm just going to stay out and wait patiently for the market to settle down, and so that you can get organic buying and selling pressure back in the market. So I've actually decided to head out of the house and go and work from this coffee house that is not that far away, because we have a wedding in the neighborhood and there's just too much noise, and I still have a lot of work to do, especially a lot of editing.